I thought I've been in microfinance for almost now. I started my career after I passed out from IRMA, that is in 2005. Since then, I've been working in closely related to microfinance in one or other way. I've been doing the micro insurance, micro pensions, and microfinance in the industry, and worked across the country. So therefore, I had the opportunities to interact with different people in microfinance sector and rural development sector. So here the story is all about the microfinance story is all about a poor woman. So the story is there is one poor woman who wants to do a small business. Let us say she wants to buy a cattle, okay, a buffalo maybe, and then she wants to have some money so that she can buy that cattle, and she has some 4,000-5,000 with her. But an average cattle in the market probably would cost around 25,000-30,000 unless she goes for high class varieties. It would be around, let us say, 30,000. Now, having some 5,000 with her, she needs another 25,000, 30,000 to buy that cattle. Now, who would give her money? The question is, who would give her money? This poor lady, she will, the first thing that any villager would do is to talk to their relatives, mostly friends. They'll start with friends and then go to relatives. They don't go to relatives first, they go to friends first. So she has gone to one family member, one friend of hers, and then she asked for that money. So they say they have some other expense. Recently they had some hospitalization, they had delivery of their daughter, blah, blah, blah. And they say, we don't have money. She goes to relatives, and relatives usually have good excuses for not giving money. Then if she starts thinking about other options, more like institutional options. What are the institutional options she has? Let us look at, let us say, government. What can government do for her? Now, government has its own way of working. So if you look at the entire population of the country and put them in an order according to their salaries or according to their earning, according to their net worth, it will form into a shape of a pyramid. Okay. And in the pyramid, in the topest, the pinnacle of the pyramid probably would be the Ambani, the Ambani of the world. And then probably when you go down, you'll find other Bajajs and probably Amitabh Bachchan also, Shah Rukh Khan also sitting there. And then you go further down, somewhere in the middle, you'll find Satya, you'll find your faculty, and somewhere still down, you'll find these rural folks. And further down, you'll find a set of people who are called destitutes, who don't have any kind of income or earning. They largely survive on charity given by NGOs or by the charity that we give. Now, if you look at the entire pyramid, now, where does this lady fall? This lady falls somewhere in the middle or in the lower middle. Or people of Food and Agri Business Management, you understand what is poverty line. So this lady is somewhere lingering between the immediate upside of the poverty line or somewhere down the poverty line. She's somewhere there. Now, what kind of support government give to these people? If you look at Ambani and all, probably they will never ask for government. Probably they'll run the government. So they don't require anything, any support from government. At best, they look at policy level things and then talk about it. When you go further down, people like employees who are earning income in terms of salaries every month, these people don't want to have anything with government. They don't want any facilities, any support. Probably they look at good tax regime, or probably they look at I want a street light, I want a good road, I just want I don't disturb me, I'll work, I'll earn, and then I'll pay tax. Thank you very much. Next level is where this lady falls. Now, for these people, unfortunately, governments doesn't have anything. For charity, yes, they have. If you go further down, there is a destitute line where government gives in terms of, let us say, pensions. So there is a poor woman who is widow, doesn't have children, and she has nothing to do. Probably somebody who is physically challenged. Probably somebody who is mentally sick. These kind of people, they don't have any earning. By means of pension or by means of any NGO intervention, they are surviving. For the people who are in the middle, somewhere in this poor segment, rural poor especially, there are no specific schemes which address the need or financial need of this customer. Suppose if you look at, let us say government has some schemes like, let us say if that lady goes to Panchayat and says, I want to buy a buffalo. Panchayat says, Madam, thank you very much. Don't buy buffalo. We have a good scheme. This is called National Employment Guarantee Scheme, NREGA scheme. So please come with us. We'll lay road from our village to the nearest highway. You participate in that, you will get some wages. But this lady says, I want to buy a buffalo. So the mismatch between the scheme and what the rural customer wants to do, this mismatch is causing her not to avail any benefit from the government. Now, government aside, let us look at another institution called banks. Now, I'll go back to some other story. I'll tell you. This is a story in somewhere 1976, 1978, where a professor in economics, somewhere in Bangladesh, professor in University of Chittagong, his name is Dr. Muhammad Yunus. So this Muhammad Yunus, he wanted to approach banks and ask them if they would lend to these poor people. Now, the bank, the story goes like this. Whenever he goes to the bank, it seems the branch manager used to hide under the table and say that he's not there in the office. The reason is, he says, I cannot lend to somebody who doesn't have any kind of credit history or who don't have any kind of asset that can be pledged in the bank. Now, this poor lady doesn't have anything to pledge in the bank. She doesn't have any documents. She doesn't have income proof. She doesn't, probably in that time, she doesn't have Aadhaar card. None of us had Aadhaar card, but she never had any kind of standard valid documentation that can be accepted by the bank. And also the bank has to assess the credit worthiness of this particular customer. Credit worthiness is basically how much she can take and how much she can repay in a month. So this kind of assessment is not possible. Leave aside the product availability and other things, but basic assessment is not possible by the bank. And this bank is situated in a town somewhere. Let us say there is a bank in Hyderabad, and some lady somewhere in Sadashivpet or Narayankhed, she cannot come to Hyderabad and talk to these bank people and avail a loan. Even if she comes, she will be afraid by looking at the look and feel of the bank. Even she enters, she will be afraid of the people sitting there, the branch managers with a frown face, or even if she goes and talks to them, she doesn't understand what they speak. Why? Because they talk about, madam, you give me your Aadhaar card, you give me photograph, your photograph with your husband, you photograph from back side, from front side, color photograph, black and white photograph, surety signatures, you give me documentation, gone. So she doesn't understand that language at all. Even if she does, the bank finally rejects her loan because she is not credit worthy, or basically they are not able to assess the credit worthiness. So the bank is another institution which is again going away. So a government failure and a bank failure to cater to a particular customer is where this microfinance has triggered. So as I go back to that story of Muhammad Yunus, then he realized he saw some customer, some lady who is doing her small business. She used to prepare, let us say, we'll take general example. Let us say somebody who's selling fruits. So he realized that so this lady, suppose a fruit vending lady, what will she do? Let us take in Hyderabad. What will she do? So she first has to go to a money lender, okay, and then ask that fellow to give her a push cart on rent. That fellow will deduct something upfront and he'll give that cart. That too, if she goes at 6 o'clock in the morning, probably he'll wake up at 7, then he'll take his own time, then some kind of documentation, and then finally he gives that cart on rent. Now, then the problem is when she takes that cart and goes to, let us say, Monjai market to buy fruits. By the time all the fresh fruits are taken away by other people, she is late, therefore she'll get the second quality or third quality of fruits that are available. She takes that. By the time it is 9 o'clock, she reaches to the streets and starts selling the fruit. People are not there to buy because they have gone to offices, they have gone to schools, women are busy with their own work. In the evening, probably she can sell going to some kind of temple, near the temple or some place like, near bus stand or railway station. But the problem is she has to give back the cart by 8 o'clock, otherwise there will be a penalty. In fact, if some fruits are left over, what will she do? She has to take those fruits home, allow them to get rotten, or sell them at a rotten state the next day at a cheaper price. If she owns that cart, she can stay back whole night, probably in the bus stand, railway station where people travel and people buy, especially bananas or some kind of fruit before they get into the travel. So a small intervention of buying her a cart can change the entire economics of our business. If you are good at MBA finance, then you will understand there's something called working capital requirement. This is very similar to working capital requirement. So this is what Mr. Muhammad Yunus has realized. He understood, and then he said, boss, okay, let us try and get some money for her, either through government or through banks. But both areas, he realized it is a failure. Because the banks, as I told you, are not interested in giving loans to this kind of people. Government has no fitting scheme that can suit this kind of profiles. Then he said, okay, I'm a professor of economics. Let me see what happens when I give loan to this lady. She doesn't have any collateral to give. So he started giving a loan to a particular lady and said, madam, you please use this money to buy a cart or maybe use for raw material, purchase whatever you want, then you start doing your business and come back to me. Please repay whenever you can. And to his surprise, this lady started repaying very promptly. And then he also realized, as a professor of economics, he knows how to do this maths. So he realized that her profitability of her business has increased because of a small intervention called financial credit. Now, after that, she said, okay, thank you, boss, you are giving me. Then I have more people. There are many people who want to give. He said, boss, I know you, madam. I have seen you for so many days. I've been watching you. So I know you. I know that your business has potential. That's why I gave you loan, and therefore you have also repaid. How would I believe other people that you're bringing? So she said, boss, if you believe me, then I'll take care of those people. I'll give a surety for those people. If they don't repay, I'll repay. No. So again, I'm telling you like a story because that will be interesting for you to understand. It may not have happened exactly this way, but it is broadly like this. So this lady is ready to take the responsibility of repayment of the other customers. So he said, okay, then 4 of you, 5 of you form a group, and then I'll give you loan. You please do your academic activity, then repay me. And if any of you are not repaying, you take a joint responsibility. So you help each other in terms of business building and then repay me. That's how we started something called Grameen Bank. Now, if you Google it out, you know what kind of size and shape now it is. It's a huge bank. It is one of the most important economic institutions of Bangladesh, in fact, in the Southeast Asia also. So he created this Grameen thing. So this is how microfinance has started. This is the origin. This is the origins of microfinance. Now let's come back to India and see what is happening during the time. During 80s, largely post-independence, 70s, 80s, what was happening was there are a lot of organizations which were established, which are NGOs. Now, what these NGOs do, they kind of take a village and then maybe a catchment area is what they call, some 5, 6, 7, 10, 15 villages in a particular area, and then help them improve their standard of living by means of different kinds of interventions. It can be irrigation, it can be child welfare, it can be women welfare, it can be health. There are a lot of other things, what they call themes. They work on a lot of themes. Now, once this microfinance model came up, these NGOs were very quick to take this model and say, this is one good model we should adopt. Why? Because if an NGO is working, they are working at the mercy of a donor organization or a funding organization, usually an international organization, and who are supporting by providing them some kind of funds. Now, all these donor organizations have some kind of priorities in terms of geography, in terms of thematic area. So there will be one organization which will focus only on natural resource management. There will be one funding agency which will be focusing on women welfare. There will be one focusing on irrigation. Now, if you take fund from those organizations, which will be limited for maybe 2 years, 3 years, or 5 years, depending on intervention, after that period, that funding suddenly stops. It is like a passing cloud. It just passes. The cloud changes. Now you don't have any fund. You have created infrastructure, you have office, you have employees, you have a couple of vehicles with you to go around the villages, and the intervention is successful. They have done whatever they wanted to do. The funding agency has moved to some other place. Maybe they are now looking at Bimaru states. Bimaru is what they used to call Bihar, Rajasthan, Madhya Pradesh, Uttar Pradesh. Subsequently, this funding has moved from Bimaru states to Northeast. And now, if you ask me, most of the international funding is going into Africa or into disaster management. When there is a tsunami, when there is a COVID, when there is some kind of issues, this is where the funding is going. So this, the movement of fund, the uncertainty of fund is making them uncertain about their activities. Therefore, they were looking at some kind of sustainable income models. Then they realized microfinance is a sustainable income model where you can do intervention and continue to do, because you get one fund and use that fund to lend. you get interest, therefore your money doubles in 4 years or 3 years, whatever the time, depending on the interest. Again, you lend it, you keep on lending like that, and therefore your income is sustained, and therefore you can run the business and give salaries to employees and keep those vehicles and offices. This is fantastic. Model worked well. That is how SAG lending model has started in India. Now, in the SAG lending model, you have to understand what is SAG model. SAG is self-help group. Ideally, the entire group is supposed to do a same activity. I will give you an example. There is something called Lijjat Papad. It is a cooperative. You might know about it, but it is slightly, it is very similar to compare, where the entire women will come together and do one particular activity. It can be a notebook binding. It can be establishing a dairy. It can be a Lijjat Papad. It can be pickles. If you go to any industrial exhibition that happens in Hyderabad, you will have one stall called Dwakra stall. If you go to that stall, you will see women who have done all this. Even if you go to Ratnadeep and all, go to snack section, look at the locally made snacks, not the branded ones, the locally made snacks, the murkus or the tilke laddu and kind of things. You look at that pack and look at backside of the pack, you'll find that some of these things are made by the women groups. These are all self-help groups. In a self-help group model, what happens is either donor or sometimes bank also gives money to the NGO. The NGO gives that money to the group. This is more important. Money is going to the group, not to the individual. Now, this group has a responsibility to use that money for some kind of joint economic activity, helping each other, therefore a self-help group, and repay that money to the funding agency through NGO. This was the model which was operating. Now, in the entire model, the NGOs were not making any profit. Obviously, they are not for profit organization, usually registered as Section 25 companies or as a trust. If they are not making profit, the problem is, I'll tell you the story of Mr. Vikram Akula. Vikram Akula is a known man. 2004 onwards till 2010, he was in limelight. Then he took a little backseat, and then he came back and he started a microfinance operation. So during his limelight, he was called the poster boy of microfinance. Even today, many people consider Vikram as one of the genius who created microfinance, scaled up microfinance in India. Now, this gentleman, he was sitting in his office, and then one lady walks in, and at that time it was an NGO MFI. One lady walks in and says, "Sir, why don't you give loans in our village?" He says, "Where is your village?" So that village is maybe 25 kilometers, 30 kilometers far away. This organization is operating in a limited catchment area, maybe 15 kilometers radius. This lady is outside that border. Now Vikram has to say, "Sorry, Amma, I can't give you any loan because it is beyond our catchment area." And she says, "Why am I not poor? You give loans to poor people and I am also poor. Why don't you give me a loan?" Now that made Vikram start thinking, why this model is not a scalable model. It is a model which is very successful in a local catchment area. If there are any people from Tamil Nadu, if you go and explore in microfinance sector in Tamil Nadu, you'll find there are a lot of NGOs still operating in a local catchment area. They don't expand beyond the district. Maybe a Dindigul, maybe a Tirchi, maybe a Shivaganga or someplace. So NGO model is always restricted by geographical limitations. So if you want to go beyond that, you need more money to disburse. If you want to disburse more money, you have to get it from banks. If you have to get it from banks, you should have some kind of equity. And if you want equity, you should be a profitable company, not a NGO. Why would anybody invest in a NGO? People only give charity to NGO. People only give donation to the NGO. They don't invest in the NGO. Now, this is what he realized. And then he thought, the NGO model is not the way to operate. We have to have some kind of profitable or profit-making entity where we bring in investors, and showing the equity, we can go for lending, and then banks will lend us money, and then we can expand our business. This one thought process has changed the entire landscape of microfinance. Till then, it was NGO MFIs. They were operating and giving loans to women. Now, what is the impact of this entire thing? I'll come back to the change that has happened after this scalable model has been invented. Before that, we'll also understand what is the impact microfinance is creating. Now, in microfinance, the money is given to women, a group of women in a village. So this is how it happens. We identify women, then we look at their potential, we look at the kind of business they want to do or they're doing, what kind of financial requirements they have, what's the profitability of that particular business, and lend some money. And these people will continue to do their business and they'll come back to us and repay on a weekly or fortnightly or a monthly installments. It varies depending on territory, depending on organization, and depending upon the loan that is given, weekly, fortnightly, or monthly. Now, when there is a weekly model, or let us say fortnightly model, which is more prominent these days, people are now shifting to monthly slowly, but more prominent one is the fortnightly. In this model, what happens is people are coming and repaying and sitting in a group in a particular place. So these women start talking to each other. So what do they talk? Probably they'll start talking about what is happening in the latest TV serial, who is getting killed by whom, mother-in-law or daughter-in-law, all these things. That doesn't end there. After they start talking about their village, they start talking about what is happening in the village. There are cases where women have identified that there are some kind of social issues in the village, which they went ahead and addressed. For example, there was a child marriage happening. A group of women go there and say, this cannot happen. Individually, probably a woman would have not done that. But since they are part of a group, now they have that kind of support from each other, and therefore they're able to do that. There are instances where the microfinance members and group leaders have grown into political. I mean, at least they have a political awareness. I particularly have witnessed one case where there is a village and there is a sarpanch who is of the upper caste, and then there is first time electricity is coming into the village. This happened in UP, almost 2004, 2005. So electric poles came, they were all dumped before sarpanch's house, and they are about to start giving electric connections to the village, which means it is going to start from sarpanch's house and then expand into the center of the village. Probably it will never reach the end of the village. That is where the economically downtrodden people stay. So these women together, they discussed and they said, how can this happen? Why electricity should be more important for only sarpanch? Why not for us? So they said they all together went and sat on those poles and said, if you are going to start electricity, it should start from our house. And ultimately, they are group of people are votes for the politician, sarpanch, or whoever it is. So he agreed to that and then started from that village, from the end of the village. So this example is about how politically aware women are becoming. So there is a social impact, economic impact. Obviously, it is money given. There is also a political impact. The most important aspect of this entire business is, imagine some place in Rajasthan where there is a family, there is a daughter-in-law who's got married a year back. Now she's like, the family is more patriarchal in nature. Therefore, husband is dominating, mother-in-law is dominating her. She doesn't have value in the house. She's not involved in the decision-making process, blah, blah, blah. Now, if she starts doing a business, taking loan from microfinance, suppose she started doing a chudi business, or she started a small tailoring unit, and then she starts earning money, and this money is flowing into the family income. And therefore, the family income status is changing, and parallelly, this woman's status is also changing in the family. Now, the mother-in-law cannot blame that woman because she knows that she's one of the important income or bread earner of the family. Similarly, the husband also will be careful, what we study in gender studies, the relationship between husband and wife or man and woman would probably be impacted by the income she's generating through the business she's doing. So looking at all these things, there is social, economic, political, and gender-related empowerment which is happening because of microfinance. It is not only because of poverty elevation or not because there is an economic intervention. Professor Muhammad Yunus during this time was given Nobel Peace Prize. So this Peace Prize, I want to underline that. Peace Prize is given to Mother Teresa, it is given to Nelson Mandela and people like that. So it is, don't look at it as a intervention which is only economic or which is only financial. It is having a larger impact on the society. Now let us come back to the Vikram's model where I told you about the changeover which is happening. So you remember there is an NGO model. NGO is giving funding to SHG, and SHG is doing some business, giving back money to the NGO. Probably NGO got a grant, they may not return it back, or they have a timeline where they can return it. Now the new model, which is NBFC model, non-banking financial corporation. So non-banking means it is not a bank, but finance company. So it means it is giving finance. It is working on finance. So subsequently, RBI came in and a lot of things happened. So now it is NBFC without taking any deposits, non-deposit taking NBFC. So in an NBFC model, what happens is it is a profit-making company. So it's a for-profit company. So there is an investor who is investing money, and this money is shown as equity to the banks. Now, banks based on equity, they have their own ratios. They look at asset liability ratios. They look at serviceability ratios. All good ratios in finance that you learn. They look at all those things and they say, okay, boss, you have 100 crores as equity. So I'll give you 400 crores as debt. You please take this money and give it to whatever rural woman or whatever business you want. Now, in this case, it is a microfinance business. It can be any business. If you start a factory, let us say, if you start a food agri processing unit, it is equity and the business potential which will determine the kind of debt you are going to get. So in this case, the business potential is already established. It is proven because of microfinance models are there, which are there at the time. It is more about equity and the ratio of equity, which was mattering more. Now you have opportunity to expand business into other states. So that is how SKS has moved from that time Andhra Pradesh or United States of Andhra Pradesh. From there it moved to Karnataka, then to Bihar and Jharkhand, Madhya Pradesh, and then across the country. Spandana moved, and then Share Microfinance moved. There's Satiners, SVCL, which started from north, which is moving towards south. There is Equitas, which started in Tamil Nadu. Things are moving and people are getting more and more loans, more and more debt. Companies are increasing in size. Companies are becoming bigger and bigger. One of the main reasons why this has happened is the government's rule of having priority sector lending for banks. So government is saying, boss, for every bank, they call the bank and say, boss, you're doing good business, no problem. But part of your business should come from rural areas. You cannot restrict yourself to urban areas alone. These kind of restrictions are there for insurance companies as well. And similarly, banks also, these restrictions have started. This is not a restriction, this is a guideline. They call it guideline. But no, incidentally, the guideline also says if they fail to do a priority sector lending, the bank's license can go off and the head of the bank can get into a jail. So they are as strict as that. Therefore, people are looking at models on how we do agri lending, how do we do rural lending. And then they realize microfinance is a business which is completely into rural. So if we give every rupee to them, they are capable of expanding. So they'll go into, now they still not gone into Assam, they have not gone into Gujarat, not gone to Rajasthan, maybe Tripura, Agartala, and they start going into interior parts of maybe Andaman Nicobar also. So banks started giving more and more money. More money, the bigger the size, then the expansion. So everybody expanding, and then fortunately or unfortunately, it happened. Andhra Pradesh had the maximum number of MFIs. We can't say precisely what was the reason. Probably the culture of chit funds, which is there in Andhra Pradesh. Probably the NGO culture, which was there in MFIs, or in the state. Or by looking at each other, these people have expanded and they became biggest MFIs in the country. Top 5 MFIs of the country were located in Hyderabad alone. That time Hyderabad was capital for both states. So what is the challenge? The challenge came in 2006 in Krishna district of Andhra Pradesh. So there's one gentleman called Naveen Mittal. He's the district collector of that district. So one fine day he realized that microfinance is expanding so fast that they are giving so much loans, and therefore rural women are getting into a debt trap. You take 10,000 rupees, and then to repay the 10,000, you take 15,000 rupees loan. To repay 15,000, probably you'll get into another 20,000. Then you go to 3 MFIs, 4 MFIs, 8 MFIs, get money from as many as you can, and then suddenly maybe abscond. And there were also cases alleged or reported that there are suicides because of microfinance. Though I don't endorse, I don't believe that statement. The politically motivated media has their own way of putting it. But there are I mean, to admit very frankly, I mean, we are having an academic discussion, not an industry discussion. So, very frankly put, yes, there were challenges because there is no way you can identify whether this customer has taken a microfinance loan or not. Suppose X has given a loan, Y will also go and give a loan. Z also can give a loan. Nobody is going to check whether somebody else has given a loan or not. So the chances of indebtedness increased, the chances of default also increased. So this first threat or the first warning signal which came in 2006 was handled well by the industry probably. Then somehow it was managed and then things moved on smoothly. But the bigger challenge came in 2010 when the entire AP and Telangana put together, they were completely agitating against microfinance. So as a students of agriculture and related to rural businesses, you should understand microfinance has its own good things to do. I mean, as I told you, there are a lot of things, good things that microfinance does. But uncontrolled business, or in fact from NGO business, it moved to a business model. It's a profit-making business model. Things have slightly changed. Now, NGO is oriented towards welfare of the people. NBFC or a business model, it has its own social objectives, it has its own CSR, but ultimately what matters is the bottom line. So this is where 2010 crisis happened, and then suddenly the entire microfinance business was shut down in AP and Telangana. I know at least 10-15 small MFIs which were shut down during that time. I was part of one of the committees, crisis committee, so I went and we had a discussion with government people also, including a couple of IAS officers and chief minister as well, finance minister, chief minister. Things did not move well. So this debacle, so any business will have debacle. I mean, as a students, you should look at this as a how an industry has overcome that debacle, how people have shown resilience, and how business has come back to normal. So quickly, 3-4 things happened. One, a credit bureau was formed. What is credit bureau? So now I told you the problem is I go and give a loan, and the customer is not. If customer is taking a loan from somebody else, I don't know. Now, if I have a credit bureau, which is very similar to our CIBIL, you know whether the customer has taken loan from somebody else or not. And based on that, I can determine how much loan she can absorb, which is called the credit worthiness. So now RBI came in and RBI has defined what is that. It was 1 lakh for some time, now it's 1 lakh. So there is a limit. So all MFIs put together, you can give only this much. Either it is given by 1%, 2%, or maximum 3%. It can't be 4%. This is one credit bureau. Second, there is also an advancement in terms of how do we use the technology, and therefore technology has been used for all the customer sourcing and then disbursement and then collections also. So technology also came in as one good thing. Third, customer protection principles have been incorporated in the industry. There is an SRO, which is called MFIN. SRO is self-regulatory organization. So SRO has been formed. They have been educating on customer protection principles, code of conduct, and then fair practices, fair collection practices, and a lot of other things. They started doing advocacy. They are also doing advocacy on the other side, representing the industry with the government. Then the last most important thing which has happened is the employees have been, now the training part has become very, very important, because during the expansion mode, you don't have enough opportunity to train the people well. When there is a huge expansion, especially in the industry, suddenly you see a spurge happening. People jump from one place to one place. They don't even complete a good tenure in an organization. If you ask me right now, being in HR, I can tell you, post-COVID, IT sector is like that now. There's a lot of demand. People are jumping from one place to one place. They're not even spending 6 months, and they're getting offers which are double the salaries that they're currently drawing. But this kind of spurge, this kind of sudden spike can create some kind of problem in the future. So this has been avoided by incorporating a lot of people practices, HR and training practices, which has changed the face of the industry. From 2010, again, our nations have slowly got back the business. People are good enough to repay in some places, except Andhra, Telangana, where it was restricted completely. And then we slowly moved on to the next level, where the next challenge was waiting for us. Before going to the next challenge, I'll tell you parallelly what was happening. Government also started doing microfinance business. This is interesting. Now we had NGO, we had these business entities, and now we have government also doing microfinance business. Now these are politically motivated, obviously, welfare measures and populist schemes. You have any government scheme, it is routed through these SHG models. In Andhra Pradesh, it is called Velugu. In Kerala, it is called Kudumbashri. In Bihar, it is called Jivika, and a lot of other places, different names. So there is a government-run microfinance also, and there are allegations that before the elections, suddenly money is disbursed into these SGs. Now, again, we are foolish to assume that people don't know about it. People know everything. Rural customers are smart enough to understand where to take loan, where not to take loan, or if they take, what kind of advantage they have, what disadvantage they have, how to repay those loans also. The awareness of people also increased over a period of time. Now, if one of my field staff, they tell me the story. If they go to the field, especially in places like Tamil Nadu, Karnataka, where microfinance has been there for quite a long time, they go and they'll say, Amma, ab sab log jud jao, let us form a group, then we'll provide you training. Now, what training, sir? They'll come and ask you, sir, what is the product, sir? What is the interest rate, sir? What is the repayment frequency, sir? So this fellow is recently recruited guy. He knows nothing as compared to what customer knows. So customer is fully aware about microfinance today. Okay, so parallelly, all these things are happening. At the same time, this bigger crisis has come, which is called demonetization. So one fine day, our Honorable Prime Minister came onto the TV and said, Mitro, and then it all started. Now the challenge is, once this was done, okay, by the time microfinance institutions have slowly moved from paper documentation to digital systems. One good thing our Prime Minister at that time, Modi, was doing was the introduction of JAM Trinity. JAM is basically Jandan account, Aadhaar card, and mobile number. So integration of these three is called JAM Trinity. So when a customer is having a bank account, Aadhaar is linked to that account. Aadhaar has become one unique identity for everybody, and there is a mobile number attached to that. Then it is easy for any microfinance to disburse loan into the bank account directly without any hassle. Therefore, people slowly shifted. Then they made Aadhaar mandatory and then moved into bank, mostly Jandan accounts, and disbursing loans into bank accounts. Now, Demon has created a different problem. Now, Demon, what challenge it gave is, many people are not having liquid cash in their hand. All of us face that problem at that point of time. So when we went for repayments, people were not willing to give the money back. So that's where people started innovating on how to do cashless collections, digital collections. So that was a smaller problem we faced. Then the bigger problem came. The recent problem, as you all know, it is COVID. The challenge in COVID is it has impacted the livelihood of many people. I don't completely agree that it has impacted the livelihood of everybody. No, because as I gave you an example, IT sector has boomed like it. Similarly, in a village also, maybe a Kirana store guy who used to sell Kirana things had sold more than what he sold earlier before COVID. During lockdown, we all ate more, period. Check back with your family. You'll know we have spent more money on groceries because we are eating more. We were also spending money on medicines. We are also spending money on masks. We are spending money on sanitizers, soaps. We gone crazy. I don't know what kind of cleaning material that we have purchased during that time. So all these things were sold by that Kirana guy in the village. So he was having good understanding of business. So he was making money. While there are people who are, for example, somebody who's an auto rickshaw driver from Bihar who was migrated to Mumbai, had to migrate back to Bihar, sit there and wait for the lockdown to get in, and then he's not able to make any money. So customers said, we don't have money. The crux of the entire microfinance story, or the interesting part, is always microfinance had 99% collections. Whatever money I give, I get back 99%. It came down to 98.5 or 98 during Demon, but in COVID, it fell down to as low as 40-50%. Now, after that, there were a lot of interventions. Government also came up and gave some moratorium, extension of period and all these things. After all that, people are able to repay the money now, coming back to 95 to 96%. Probably it will end somewhere 97, 95 to 97%. Overall, there will be some kind of slump in the industry. But the best part of the entire story is people who take money will give back. This is how rural economy works. This is what Muhammad Yunus believed. This is what people are proving even today. So I'll conclude this entire story. I took my 45 minutes. I think I'll conclude here. So the story is trust on rural customer is the essence of the entire business. And that trust started microfinance with Muhammad Yunus. The same trust is giving back microfinance the money that is due as on today, 95 and 96%. That means this business is going to be there. These customers still need money. Though banks have got into straight lending, direct lending, still they don't have that kind of access to these villages. They are dependent on microfinance institutions. You look at BFIL, which used to be called SKS earlier, now it is BFIL, Bharat Financial Inclusions Limited. Now it is a subsidiary of industry. You look at BSS, it is Kotak subsidiary. You look at Samasta in Karnataka, it is a subsidiary of India Infoline. There are talks that Axis Bank is trying to buy some other MFI. So banks do not have that direct access to reach out to these villages. They are dependent on these kind of microfinance institutions. Therefore, these institutions will continue. Probably some of these institutions will convert into a small bank or a payment bank, like what happened in the recent licensing. About 10 small bank licenses were given, 7 of them were microfinance. So these MFIs will slowly convert into banks, or probably they'll continue to be MFIs because there is a need and there is only these kind of people have the reach. So with that hopeful note, I think I'll conclude the story on evolution of microfinance from Muhammad Yunus to demonetization. Thank you.